Rebecca, when I saw this headline cross, the first thing I thought is that Continental is going to drill a lot. It's going to drill hard and fast if this deal goes through. On a broad basis, is that what we're learning from the private companies versus the public companies?
I think that's exactly what we're learning. We're learning that as a public company, it's not acceptable and it's not going to be rewarded to really grow production and go back to that methodology they used 15 years ago that really, really hurt many investors for several years. He's making a choice that is uniquely different than what the rest of the group is willing to do and what investors are going to allow. And he's making that choice so that he can maximize profits right now. How that plays out in the long run, I think, is yet to be determined, but he's certainly making a bet. I would definitely just hesitate to make a read through that this means that there's going to be wide, broad-based consolidation or buy-ins across the rest of the energy sector, because I think this is a really unique leader of a company in a unique situation.
Rebecca, that's a fair point. But in the near term, he's going to make potentially more money than the rest of the group. Isn't the temptation, if others see him doing that, for this kind of thing to be replicated?
So I think the temptation is always there, and I think that there's certainly with the crude strip where it is, there is a ton of temptation. However, you have to have the access to capital, and you have to have your investor base behind you to pull that off successfully. And right now, that's not really there for the rest of the energy sector. So although the temptation is great, the repercussions and the lessons learned from previous experiences doing this, I think, are outweighing that, even though it looks super juicy in the near term.
Yeah, and I think that that's basically what Harold was referring to in that letter. Basically, like, they needed more capital 8 years ago, and the market really liked them, and now the market doesn't like them anymore, and therefore they have to go private to kind of do what they want to do. In the meantime, I should point out that we're seeing oil stocks near record highs. Like, yes, they got hit yesterday along with everything else, but on a relative basis, they're getting hit the least, and even today they're in positive territory. Exxon had a record high last week, Chevron a 52-week high before that, and I'm wondering sort of how much more juice is left in that space. And is it fundamental? Is it supply and demand? Or is it like we missed a rally somewhere and we want to get in on it now?
So it's both. Supply and demand is a huge factor. I think the structural deficit in the market has been well talked about through several sell-side analysts talking about this trend of underinvestment, limited supply, and even in the face of moderating growth, still being in a situation where crude remains very resilient. So I think that that's kind of a medium-term trend that people are comfortable with. So that aspect is there. The fundamentals of the companies remain really strong. Through this period of not growing, they've reduced their debt. They've increased free cash flow. They have become stronger entities throughout the course of the past several years. So the fundamentals are very strong. And I think the third thing you mentioned is it's still a very small percentage of the S&P. Energy is now 5% of the S&P. Again, that's up a lot from 3% maybe 6 months ago. But there's going to continue to be a chase here. And I would also highlight that when everything else is not working, and this is the only thing that is working, it's going to capture those kind of rotational trades where, hey, I need to catch up and I need to protect myself. I've got to be somewhere that's making money, and it's going to capture a little bit of that as well. So I think you have supply demand. I think you have fundamentals. I think you have technicals. It probably continues to outperform. Will there be days like yesterday where everything gets grossed down and we see energy underperform? There will, but on a net over net basis, on day over day, if you look at this 6 to 12 months out, it's likely going to be a sector that continues to do really well.
Rebecca, I hear what you're saying, and a lot of people hear what you're saying, but I still get a lot of people saying to me, I'm not investing in energy because I've missed the boat. What do you say to those people? The gains have been really strong so far. This is a sector that is held up. To Alix's point, how much juice is there still left in this trade? Where is the risk reward in this trade?
Great point. And I think that you're definitely highlighting kind of where people are at on being afraid to jump in now because they feel like the easy money's been made. I would just say the crude strip on the back end of the curve continues to rise. And these companies continue to outperform, and they can continue to grow and do very, very well over the next several years. So yes, you missed a good portion of the trade. Does that mean you should not invest even though they still look good? No, it probably means, hey, these still look good and I might have missed what happened thus far. But if fundamentals are there and the supply and demand is there, it still makes sense. Are you going to have volatility? Yes. And I think that's the key is like, is the volatility in the crude market what keeps people away and not being able to stomach it? And I think that's where we really have to think about where things are.